Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra, and on this special edition, we're going to be talking all about gold. It's been a fantastic day for gold bulls. It's been a one-way run-up for the gold prices as well. In fact, they've surged almost 2% to hit record levels on the MCX at over 60,400 and thereabouts. You know, every moment when we saw the markets open until the evening, we did see fresher records being made right there. Record high prices for that one in the domestic markets. In the international market also, in fact, we saw gold prices really crossing the $2,000 mark for the first time in more than a year. So it's at the 52-week high levels in the international markets, although still below the pre-COVID life high levels of $2,075. Now all-time high in India, in Australia, and UK as well, and an 11-month highs for the gold prices in the US as well. Now what is really next for the gold prices from here? Should you be really buying, selling, or holding this yellow metal at this point in time? Let's find all of that out. Joining in to share insight on the outlook on the gold prices from here on, joining in with us is Mr. Navneet Damani. He's the head of research for commodities and currencies at Motilal Oswal Financial Services. Navneet, thank you so much for taking the time out for this discussion. Well, gold is shining bright, and this is what you had expected the last time around that we had interacted as well. First up, for the benefit of all our viewers, if you could help us reason out, what is really leading to this kind of a rally in gold prices?
Well, Sakshi, thank you for having me. The rally is not a major surprise as we've been bullish on gold for quite some time now. And what are the factors also driving the rally? Well, in 2021, it all started with the end of COVID crisis and easing of monetary policy. Then it started with then the support was led by Ukraine and Russian war. And as we approach the middle of 2022, the news buzz from the war started to fade off, and that is where we see a lot of correction now, probably pressure coming onto gold prices. Now, what suddenly happened and what is happening in the last 3 months that the prices have shot up by more than about $350. Firstly, we saw the dollar index correcting from about 115 levels to about 100 levels. That's about 15% correction from the peak. Secondly, we saw that China reopening its doors, and with China reopening its door, not only just from the moving out from the COVID crisis, but China, just to remind you, is a big importer of gold. So once
Sure.
things stabilize, demand for China is likely to pent up in a big manner. They have been almost working in a shut door environment for the last 2 years, and the demand is likely to be pretty robust as and when the market gradually opens up. Chinese by nature have been bargain hunters, and when prices were low, they started to capitalize this moment. Also, to top it up, we saw that financial crisis has started to gear up over the last couple of months. We've seen a couple of major announcements of banks having been under stress. Inflation has been pretty sticky, even after 450 basis point of straight hike in the last 1 year. Inflation continues to hover around 6% mark in the US. So that's been very sticky. And over the last couple of weeks, SVB bank crisis and now the Credit Suisse upheaval is kind of what is playing an upper hand on the gold prices. To top it up, we have the Fed meet in 2 days from now, where market anticipation was for a 50 basis point hike about a month back. Until a few days back, it was about a 25 basis point short hike. And as we stand today, it's between a no rate hike possibility to a 25 basis rate hike possibility. So it
Yeah.
has to be very interesting to see that how the market behaves, what is the actual delivery Fed, what is the commentary which is coming in, what are their stance for the next couple of meetings, and that is what is likely to drive the way forward for gold prices.
Sure, absolutely. Thank you for touching it all in the one go and setting the context for all our viewers to understand what is really happening with the gold and around it as well. But like you pointed out, very importantly, the recent crisis, financial crisis that everybody is got worried about, and which has also led to huge volatility across global markets, including in the Indian markets as well. So therefore, on the one hand, you have a huge volatility in equities, and perhaps that's also leading to a flight to safety into gold in the Indian markets too. But I want to ask you, because of this financial crisis, we've also seen regulators really stepping in. Would you be bullish on gold despite the regulatory interference to control the banking contagion?
Well, financial crisis, as you pointed out, it's been just 2, 3 weeks that this buzz is on, and most of the regulators have pumped on have stepped in and are probably in the firefighting mode at this point in time. We've seen the Fed changing their stance or commentary over the last few days. Also, we see support coming in from ECB as well as the Bank of Switzerland has stepped in to support Credit Suisse Bank. So these are some of the factors. If you compare it with 2007 or 2010 instance, where the regulators were sitting on the sidelines and waiting for the event to unfold, in 2023 we see that regulators are pretty active and have been very supportive of the event. So I don't
Hmm.
see that it is going to be a very major crisis which is going to be impacting the world market. But having said that, as I mentioned, inflation plus stance of the Fed is what is going to be driving the market. It is not going to be the financial crisis, but Fed's commentary,
Sure.
Fed's stance, and the rate possibility of further rate hikes or tapering of rates is what is going to be the key factors which are going to be driving the market.
Sure. So, like you pointed out, I'll take this point only forward. Before the collapse of the Silicon Valley Bank, perhaps, and the Credit Suisse crisis, it was expected that the Fed policy makers would perhaps look at raising the rates by as much as 50 basis points, looking at the aggressiveness that they have shown so far and calling inflation as their number one enemy throughout the kind of move that we've seen in this last financial year or the current financial year as we speak. But the ongoing banking crisis globally has now raised the expectations that perhaps the US Federal Reserve may ease up on the aggressive stance on the rate hike cycle after the two-day meeting starting Tuesday, March 21st. So what is your expectation this time around from the Fed?
Well, it's a two-way sword for the Fed. If you see, if on one hand you have a very sticky inflation, and on the other hand you have financial crisis, which is largely in place because of successive rate hikes by the Fed. In nowhere in the last probably 100 years we've seen about 450 basis point hike in such a short span of time, and that is what has caught the banks off guard and is kind of having a very strong hand on their balance sheet. I think inflation is sticky and could continue, and the Fed could continue to maintain a stance on the inflation in the next couple of quarters also. But at this point, the focus largely is going to be how to prevent these banks to come under stress, how best they can manage or mitigate and sail out of this crisis. So the inflationary concerns are going to take a step back, and primarily the focus should be on savings the bank or probably mitigating the risk that the regulators are facing at this point in time. And that is what is going to come out in the largely that is what is the expectation in the commentary as well. So my stance is that inflation worry is going to be there for the next couple of quarters also. We shouldn't get
Hmm.
little carried away, if the stance becomes no rate hike, or probably if they talk
Yeah.
about taper also.
Yeah.
But having said that, further pent up for gold, I don't think there are many catalysts at this point. Most of the tailwinds have already played out, and gradually
Yes.
some of them are likely to become headwinds. So if you ask me a long story, to cut the long story short, do I expect $2,200 a 10% rally from here? I don't see that happening in the near future. Probably markets tend to overshoot. You may see 2050, $2,070. That's about a 3%, 3.5% rally from here. But
Hmm.
that should be the long and short of gold. I expect some consolidation or correction to start in from there.
Okay, exactly. I was coming to that, the kind of tailwinds that could perhaps lead the momentum to continue from here on. Since you say that most of them have played out, what is the kind of prices, if you can give us the prices that you anticipate for gold in 2023, both in INR terms and in US dollars terms as well?
Well, on the dollar front, we expect that we already seen $2,000 in best case 2050, 2070 is where the prices can overshoot towards. On the domestic front, if the rupee continues to remain around 83, 84 levels where it is today, then the prices on the domestic front could be in the range of say 61, 61, 500 at best. I don't see if the prices overshoot also to be sustaining it for a long period of time. But eventually, they will start to correct.
Hmm.
And from investment point of view, the risk reward doesn't favors one to invest in gold at this point in time. Let's wait for a healthy correction. Maybe a couple of quarters is where I see the correction or probably
Yes.
consolidation will happen,
Yes.
and that's when investors should look to enter the market once.
Right, exactly. I was coming to that because, on a weekly basis, gold prices are actually up about 6%, marking their best gains over the last 4.5 months or so. So I was wondering, which most of the viewers must be wondering at this point in time, that is it the right time to really buy fresh gold and put in fresh money for gold investments, or has one really missed the bus? Would you say that has one missed the bus right now?
Well, if you miss the bus, then so be it. But do not chase the bus.
Yeah.
There, be a probably accident waiting around the corner. So
Hmm.
better to switch to another asset class. Probably equity in the near future could give you some reasonable returns. Silver is also a very good bet at this point in time. We've been talking about silver in the last two
Sure.
three interactions that we have, and I think gold vis-a-vis silver, I would still put my money in silver at this point in time. Returns from here could be handsome. Any major correction, both in gold and silver, could be buying opportunity. But I would like to put my money on silver.
Okay, I'll come to silver also, but what about those wanting to sell gold? You do say that, one should definitely not chase the bus at this point in time and look for gains and this, because this may as well get into a consolidation mode going forward. But those wanting to sell gold at this price, those who had invested perhaps at lower levels, we did see those prices correcting to 46, 47,000 rupees per 10 grams as well in the Indian markets. So those who had actually caught that bottom at this point in time, they may be interested in selling their gold at 60,000 or so. Your thoughts? What should those people do?
Well, you have 2 days time to sell gold. I think before the Fed meet starts, probably or market tops out over the next, say, probably 1 week or so. It's a good opportunity. If you get 61, 500, that's the best bet that you can sell gold in the near term. I
Hmm.
don't see that level holding on for a long time, and it is better to exit and wait for better levels to re-enter.
Okay, and what about silver then? You're saying that you're more bullish on silver rather than gold at this point in time. If one were to invest fresh, you'd rather prefer them to put in their money in silver rather than in gold. And what kind of levels can we expect in 2023 then?
Well, ever since it was around 52,000 mark, we've been having a positive stance in silver, and we've been initiating reports targeting 75, and gradually we have our target towards 84,000 levels also. So
Hmm.
our bias continues to remain positive, and we have seen that silver has not performed in the last run up. Silver has not performed just in like as what gold has done. So my stance would be that one could wait for a reasonable dip, and once that happens, one could look to start accumulating silver. First target would be about 80,000 and then followed by 84,000. That's a clear 15% to 18% upside from the current levels.
So that could happen in 2023?
Yeah, most likely that's the case that 2023 is where we see our 15% target being met.
All right, 15% upside for silver. So in case you have to choose the white metal over the yellow metal at this point in time. The yellow metal has given you that run up. There could be perhaps a 2 or 3% upside from here on, but then a consolidation and finally the prices may go on to correcting. But in case you're someone who invested in gold at lower levels, this could well be the time when you can actually reap in benefits of the high prices and look to actually sell gold to get those as well. Well, many thanks, Navneet, for being with us on the show and discussing, the outlook on gold and silver from here on. Exciting times for the bullion traders and the metal traders as well. Many thanks. Always a pleasure having you with us on Business Today TV to catch all the updates on commodities and currencies going forward too. Many thanks for being with us. And with that, we wrap up this edition. Do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets here on Fresbel. You should subscribe to our channel and don't forget to also continue to engage with us on our social media platforms. That's Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in.